Good morning, everybody. Thank you so much for joining us here today for this virtual financial literacy workshop where we will be discussing banking basics. My name is Roxanne and I will be one of your facilitators today.
Hi, I'm Charlotte and I'm your co-facilitator.
Okay, before we get started, I want to let you guys know if you have any questions at any point in time during or after this workshop, please do not hesitate to email us your questions. You can email us at communityrelations@myncu.com. Okay, and before we start talking about banking basics, I would like to take this opportunity to talk to you guys a little bit about us here at Neighborhood Credit Union. So we are the oldest credit union in Dallas. We were originally known as Dallas Postal Credit Union, and we opened our doors in April of 1930, which was just months after the U.S. stock market crashed. So during the Great Depression, when American confidence in financial institutions was at an all-time low, Dallas Postal Credit Union won the loyalty and trust of its charter members. In 2001, we changed our name to Neighborhood Credit Union, which is a name that just more accurately reflects our diverse base of membership across the Dallas area. Today, we serve over 56,000 members with assets over $815 million. So our ongoing effort to provide our members convenient services in their communities and mobile access wherever they go has made us a top-rated credit union across the Metroplex. Okay, so let's go ahead and get started talking about banking basics. Have you ever thought about or wanted to start a savings account, or maybe help your child open their first bank account? Well, if so, then you know to accomplish those goals, you need to work with a bank or a credit union. Do you use a pay card or a payday loan lender? If you have never used a financial institution to manage your money before, you are not alone. Today, you will learn about the similarities and differences between banks and credit unions and the resources that they offer to help you manage, save, and protect your money. We will explore banking basics, which include information about financial institutions, comparisons of different types of bank accounts, different types of interest, and how financial institutions can help protect and insure your money. So let's start out by learning about different types of financial institutions. There are lots of places that people go for their banking needs, ranging from check cashing services to payday loan lenders to credit unions and banks. Non-banking financial institutions include money service businesses, such as check cashing services, which are businesses that transmit or convert money. So folks who don't have an account at a financial institution may use this type of business to cash a check. Now, there are some drawbacks to this because these types of businesses charge extremely high interest or extremely high fees per transaction. And once you cash your check, whether you keep that cash at home, in your wallet, in your purse, that can be very risky in itself because cash is so vulnerable to theft. So banks now are financial institutions that are federally licensed to receive deposits and issue loans. Credit unions are as well, but credit unions are not-for-profit financial institutions that are member-owned and operated. So some advantages of using a bank or a credit union are in the services that they provide. Banks and credit unions offer a whole host of services, such as checking accounts and savings accounts. They also charge lower fees than non-financial banking businesses. Banks and credit unions also provide insurance on deposits and offer interest-bearing accounts. So the money that you deposit into these types of accounts has the opportunity to grow over time. So banks and credit unions sound pretty similar, don't they? Well, let's take a closer look. Both banks and credit unions allow you to deposit and withdraw cash from both checking and savings accounts. Both offer a variety of other types of accounts as well. Both banks and credit unions accept cash, checks, and wire transfer deposits, provide loans and money orders, offer insurance on deposits on certain types of accounts up to $250,000 per person. And they offer many convenient services for their customers or their members as well. ATM cards, debit cards, credit cards. Most financial institutions offer online banking and a mobile app. Our mobile app here at Neighborhood Credit Union is so awesome. You can handle all of your daily banking needs from your phone. It's super handy. You can deposit a check, transfer funds, check your balance, pay your bills, whatever you need to do, you can handle or you can take care of with your mobile app here at Neighborhood Credit Union. Okay, so let's talk about the differences between banks and credit unions. Banks are for-profit businesses that makes their money from interest on loans and account fees. Credit unions are not-for-profit businesses who shares their profits with their members. When you open an account at a credit union, you become a member, a shareholder, part owner in that credit union. So those profits get shared with you through lower fees and better interest rates. One of the primary advantages of using a bank or a credit union is that they offer insurance for your money. So how does that work? Well, the money deposited into these types of accounts at banks and credit unions is insured up to $250,000 for each depositor. So on a joint account, that account would be insured up to $250,000 per co-owner. So in the unlikely event that a bank or a credit union fails, the FDIC, Federal Deposit Insurance Corporation, or the NCUA, National Credit Union Administration, makes sure that you don't lose your money. So keeping your cash at home, even in a safe, doesn't provide this type of insurance against theft or natural disasters, such as fires or floods. One thing to keep in mind, not all financial institutions are federally insured. So now this insurance covers most of your common types of accounts: checking accounts, savings accounts, money market accounts. It also covers cashier's checks and money orders. What it does not cover are those items that you would typically purchase from a bank, especially those related to stocks and bonds, securities, or life insurance products. Items in a safety deposit box are also not covered under insurance from FDIC or NCUA. So this insurance can keep your money safe, but it is the interest offered through certain types of accounts that can help your money grow. So now I'm going to turn it over to Charlotte, and she will talk to you about interest.
Hello, everyone. Hi, thank you, Roxanne. Let's talk about how interest will help your money grow. When your money is in a financial institution such as a bank or a credit union, it may earn interest. Interest is one of the most important concepts to understand when evaluating and planning your financial transactions. Interest is a fee paid to borrow money. Interest is expressed as a percentage. If I purchased a new car from Neighborhood Credit Union, I am the borrower and the credit union is the lender. At Neighborhood Credit Union, we support our members with low interest rates on our auto loans. Currently, our auto loan rates are starting at 2.69%, and we offer the first 90 days with no payments. Financial institutions offer a variety of products, ranging from checking accounts, savings accounts, to investment products with different interest rates that can help your money grow. You can also earn interest on interest-bearing accounts. Financial institutions will pay you interest to keep your money. In this case, you are the lender and the financial institution is the borrower. Let's look at this simple graph. The blue parts represent the money you deposited into your account over time. The green parts, or the gray area of the bars, represent the interest you earned on your deposit. As you can see, the amount of interest you earned is eventually greater than the amount of money you deposited. This concept is called compound interest because you're earning interest on both the initial deposit and the interest. Your money will grow faster over time. We have talked about earning interest. Now let's discover interest owed. When you take out a loan and carry balances on your credit card, you pay interest to financial institutions. Since interest is always growing, you will owe more than you originally borrowed. In this case, compound interest is working against you. One of the ways we help our neighborhood family here at the credit union is we help our members with balance transfers. On our balance transfers on your credit card, we give our members 0% interest for 6 months. That way we help our members save money. Let's look at different types of bank accounts to see how interest may affect your banking goals. Checking account allows you to deposit and withdraw money for daily transactions. You can use a debit card, checks, ATMs, online banking, check by phone. Most financial institutions use an app on your smartphone. Most banks and credit unions charge a fee. However, Neighborhood Credit Union offers free checking, and we have low fees on our accounts. For an example, we offer our members our Kasasa cashback checking. You earn cashback on your purchases, and the account comes with courtesy pay. Research financial institutions and fees thoroughly before deciding. Not all fees are equal. Savings account. A savings account allows you to deposit and withdraw money, but there are limits on how many withdrawals you can make. The financial institution may withdraw there are limits on how many withdrawals you can make. The financial institution may require you to maintain a minimum balance. Savings accounts are useful for putting money aside for wants, emergencies, a rainy day, because they have higher interest rates than checking accounts. Neighborhood Credit Union offers our prize savings account where we give away $1,000 every Friday. And then we give away our grand prize, $49,999.99 annually. So now let's talk about money market accounts and certificate of deposit. A money market account is a type of savings account that offers a higher interest rate than a standard savings account. Money market accounts allow you to write checks on the account. There may be some restrictions, like needing to keep a high minimum balance. And CDs, certificates of deposit. CDs work like a money market account. A CD is a type of savings account that pays higher interest rate than a standard savings account. But CDs are held for a fixed period of time, such as 6 months, 90 days, a CD can be any time frame, and you have the option of picking whatever time frame works best for you. There are some other specialized accounts like joint ownership, minor accounts, and custodial accounts. And if you find that you need one of those particular accounts, be sure to do your research. Picking an account is an important task. Decide who the account is for and what is its purpose. Should it be a savings account? If so, will you need access to the funds or will you just let your money grow? These are important questions that only you can answer. Let's take a look at scenario 1. Ali has been saving for his daughter's college fund. He has about $20,000 saved and has a goal to save $40,000 over time. If you would like to follow along in your participant's guide, please turn to page 3, Ali's Decision, Part 1. Ali has $20,000 that he has been saving for his daughter's college tuition. He was keeping the money at home, but recently someone told him about safety deposit boxes at financial institutions. He was excited to learn that the credit union keeps your valuables in a vault. So he moved some of his important papers and his tuition savings into a safety deposit box at a nearby financial institution. What are some other options that could have protected his money? If you're thinking he could have gotten a regular savings account, you're correct, because a regular savings account will protect his money and he will earn interest. If you're thinking he could have gotten a money market account, you're correct again, because he could have gotten a money market account. His money is protected, and a money market account allows you to write checks on it, so his money is still liquid. He can still use it, and it comes with a higher interest rate. So, and if you're thinking he could have gotten a CD, yes, he could have. That's another good option. He could have gotten a CD because his money is protected and he's earning a higher interest rate. But the only thing with the CD, he has to know what the time frame is. Will he need the money today or will he need it tomorrow, based on what time frame he chooses for the CD? So far, we've examined how earning interest can help Ali. Let's look at what happens when he owes interest. Please turn to page 4 in your participant's guide, Ali's Decision, Part 2. Although $20,000 is very impressive, Ali would need much more than that for his daughter's education. He is still $20,000 short of his total goal of $40,000 for his daughter's college fund. Ali is considering taking out a loan for the remaining $20,000. His bank has offered him two options. Option A, a loan at 5% interest for 5 years. Option B, a loan at 5% interest for 2 years. Which option will Ali save on interest? In this example, the main difference between the two options is the loan term. Because option A is for a longer amount of time, the total amount of interest is higher. Option B would cost Ali less money in interest since the loan term is shorter. So with option B, Ali could save possibly about a little over $3,000. So that is a great choice if Ali is looking to save money on interest. Now that you have narrowed down what's important to you, you're ready to open up an account. There are 5 easy steps to opening up an account. First step is visit a bank or credit union in person to open your new account. Well, because of COVID-19, I don't recommend going in person. However, all financial institutions will allow you to go online. We have Neighborhood Credit Union has that amazing app, and I'm sure the other financial institutions, banks, and credit unions do have mobile apps and a website that you can go to. Be sure to have 2 forms of ID, and you can upload that ID with your smartphone. Provide personal information, your phone number, your address, email, and confirm and make sure all your information is correct. Have cash and check ready to go for that first deposit. Well, because we're doing it online, it's not going to be possible to use cash or check. So what you're going to be doing is you can use your pay card if you have a pay card. You can set up direct deposit for that account to fund the account, or you can use a debit card from another financial institution. And for joint accounts, minor accounts, provide personal information and double check it. Most financial institutions have online banking component or a mobile app to make banking services available without the need to visit a bank. Banking Basics provide you with a solid foundation for learning new terms, tools, knowledge, and habits for building a healthy financial future. As with any plan or lifestyle change, you will need time, energy, effort, and patience. Sometimes it is very hard to get started. Being informed is the key to success. The more knowledge you build, the sounder choices you will be able to make to improve your financial situation. Please note that there are additional resources for your use in your participants guide. Taking this workshop and learning accurate information about financial institutions, interest, insurance, accounts are big steps towards improving your financial path. Thank you for attending our virtual financial literacy webinar on banking basics. If you have any questions, please email us at communityrelations@myncu.com. Stay tuned for future webinars. Check our Facebook page for future webinars on financial literacy. And from our NCU family, stay safe and have a fantastic day. Thank you.